Stop losing sleep when you're investing in stocks. This is Seth from Monster Capital, and I'm going to show you how I look at stops and limits and how they can set you free. Picture this. You've done all your research, you found the perfect stock to invest in, and you are long, you're loving it, but there's uncertainties that are creeping in, and you either don't cut when the market goes against you, or you don't take profit where you wanted to. And then you're SOL, baby, right? So that's where stops and limits come into play. They act as your safety net against unforeseen events and market volatility. You can either utilize that for specific trading days, which is called GFD, or good for day, as an instruction input when you enter your order, or GTC, which is good till canceled. Remember, we're long a stock here. So with stops, you establish a point where you're willing to sell to prevent further losses, either by getting out of the whole position or a partial trim. It's like having a shield up there to protect your hard-earned money from the sudden drops. But just be careful with sell stops, because when it's triggered, you're then done at whatever the current market levels are at. So unless you're putting a limit on your stop, but when you do that, when you put a limit on your stop, there's a chance you may not get done whenever it goes below your limit, which is funny enough called a stop limit sell order. But the great thing about using stops and putting a tourniquet on that bloodletting you're experiencing is if you like the stock, you can retreat, rally the troops back, and then charge back in either at a cheaper level or with momentum, hopefully, or just walk away and lick your wounds ready to fight another day. You don't sit on a massive L, right? So the inverse to this is also true on short positions with buy stop orders, buy stop limit orders. It's the same process, just do it in reverse, opposite directions, okay? On the flip side, limits help you secure profits by setting a point to automatically sell when the stock reaches a certain price, assuming that you're already long. It's a tactical move to lock in gains while they're still hot, either a fast market or whether you may have your eye off the ball, which happens to everyone in this game. It's happened to me a few times, maybe 10, maybe under 20 times it's happened to me in a 20-year career. Okay, yeah, under 50 times in a 20-year career. How's that? But the age-old adage is true in that you never go broke when taking a profit. So every trade I personally get into, I set up a stop-loss price and a limit that I would lose those shares at. And I tend to put them in both at GTC, good till canceled. So by understanding how to use stop and limits effectively, you're taking control of your own investments with confidence and strategy. So next time you trade, remember, stops for protection, limits for profit. And for more tips on risk management and helping to take that fear out of investing, follow @Monster Capital across all SNS platforms and hit the like and subscribe buttons. And remember to do something nice for someone. Thanks, guys.